Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy. And folks, what an interesting day. Although the markets were prepared to hear the wide range of tariff updates on the day one, the set of executive orders turned out to be some sort of a relief. Instead, Trump ordered an investigation into the trade practices to arrive at the measures required. Now, tariffs have been used for negotiation and the demand for increased trade with the US, but currencies were the ones which were observed to have a whipsawed action, reacting to the various set of updates on the global front. Now, JK, what's your take on these developments? And also, being close to the BOJ meeting and no major tariff update, should the market expect a rate hike by the central bank?
Good morning, all. Yes, I think it was a kind of olive branch, extended by Trump on the first day of his office, particularly to the countries which were actually, facing a threat of high tariffs and, threats to the trade with the US as well. So the countries have also actually responded. China has Chinese official has made a statement that it is they are looking for a win-win solution and possibly they are going to import more from the US. On Germany's part, they have expressed optimism that the German-US relations would be positive, and they are taking these issues with a calmness, and they would not be reacting, immediately to anything. We also had, in fact, the Indian government has also responded to this by, agreeing to take back illegal immigrants as many as 18,000. That is the number that is being mentioned now. So the two governments are working together to, take necessary steps in this regard. So now what was the major concern for the markets? That is the tariff. Is at least for the time being in the background, and the Trump's administration is intelligently getting some other issues resolved, which in turn helps the US economy. And that's a relief for the markets, and that's why you are seeing all around rally. Stocks rallied, particularly in the US. The bonds have rallied further. Yields have come off. 10-year has come off some 27 basis from the recent highs in US. And also, the dollar itself has come off about 2% from the highs that we have seen. Of course, the positioning in the dollar was also quite a lot on the longer side, that is getting a bit unbound. Not to say that dollar has changed its direction. It's too early to say anything of that sort. But speaking of dollar's direction, the important thing also that the Donald Trump administration has done, the mention about Trump's administration wanting to look at the warning of currency manipulation, that can spark some more volatility in the currencies. The US administration is yet to make public what they intend to do regarding foreign exchange manipulation, prompting strategists to wonder who will be targeted. But definitely the countries that come on the radar would be Japan, China, Germany, and Singapore, who are keeping in the US Treasury's eyes their currencies weak for undue advantage. This could be a big factor going forward. And it's also a way in which the US can address their deficits instead of going for a disruptive measure like high tariff. So this is something that could be impacting the markets going forward. Other than that, we are looking at quite a few important events from here on. We have, of course, the weekly jobless claims number tomorrow, then to be followed by the Bank of Japan meeting on Friday. Then next week we have the Fed meeting concluding on 29th. In all probability, Fed will stay the course like last time, because they still will want to assess how the Trump policies will play out. But definitely they will mention if the inflation is going to moderate further, they will not be hesitant to cut further. And also then we have the PCE core inflation number that will be coming on the last day of this month, along with the US GDP estimates for the fourth quarter of last year. So a lot to look forward to for the market, slightly away from the tariff issues, which I think now will take a slightly secondary, importance as countries work out how to get over this issue in an amicable way. So in the meantime, the data from Europe or UK does not give any room for cheer. Germany's zoo economic sentiment was definitely again sliding, slid as much as 10 basis points from the expectations. And, that is actually driven by fears about tariffs, fears about political uncertainty, restricting the government from spending more for growth, etc. That keeps the ECB on course for cutting their rates further. 2% target by middle of next year is being talked about as far as the ECB rates are concerned. UK had another weak employment number, unemployment rate inching up by 0.1%. Again, now it's almost certain that UK will cut further their rate in February. And this year, their rates are expected to fall by as much as 75 basis points. And interestingly, even the market is now discounting more and more probability of two rate cuts by Fed, which had fallen to as low as only one rate cut just before the Trump assuming office. So all in all, kind of benign atmosphere in the markets, but then markets will not remain complacent, because they always know from the first term of Trump's office that you can expect sudden announcements on anything that could unsettle things. On the rupee side, yes, while we did participate in the dollars fall, but that was very short-lived. Yesterday we did open much higher than the offshore lows, but it was the opening rate itself was the low for the day, and then we had a steady buying, even some PSU bank names being mentioned. And what is concerning is further sell off from FIIs. Yesterday, even index was falling by more than 1% on the headline, the benchmark indices, and FII outflow was to the tune of more than 600 million, taking it closer to 7.5 million for the month, and that's really concerning. So I don't think the rupee will see any sustainable strength, even if the dollar index does fall, and we need a lot more, lot more filling of the gap between demand and supply as far as the dollar rupee is concerned before we can even think about the rupee strength. And that also depends on the global factors. If we do see a sustained fall in the dollar index, which I'm not calling for right now, then dollar rupee can stabilize at between 86 and 87, and eventually find some strength when the flows improve. So rupee bias continues to be one of weakness, and buy on dips remain the philosophy for the corporates, right? Thank you.
Okay, JK, that was good. And yes, folks, although the tariff issue may be in the background or secondary in nature, with the countries coming forward and looking for an amicable solution, it was the other set of updates which continued to whipsaw the markets. The Trump administration has also warned to look for the countries which are, quite keen on manipulating the currencies for trade benefits. The Fed meeting is expected to conclude on 29th of Jan, which the market participants are expecting to be on their course with a pause as of now, but being open to another round of cuts in case the inflation remains on the lower side to support the economy. Data from Europe has not been much of a support as of now, and such updates have, kept the ECB on their course with the expectations of rate cuts. So was the updates from UK. The unemployment number has led to increased expectations for a rate cut by the Bank of England, and it was the USD INR prices which opened at a low level and stayed at the low remained the same while the market participants lapped onto the opportunity to purchase more and more of dollars. The short-lived participation of INR in the USD weakness was witnessed, but at the same time, there was also a lot of FII outflows. The trade deficit continues to be one of the concern for the market participants. So as DK mentioned, the expected range can be on the weaker side unless we start seeing some more participation by the FIIs as well as a change in the trade dynamics. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening.